Let's get into it today. This is Tom Lee versus Cathie Wood on Bitcoin versus ETH. We'll break it down for you. Let's just jump right into the show. And of course, I want to thank our sponsor, and that is Coinbase. You guys can get into your crypto journey over on Coinbase. Whether you're an individual or a business, you can sign up on Coinbase. The future of money is here, and I'm telling you, we are starting to see a lot of moves in the crypto space where I think these companies are going to become banks. You can actually get a Bitcoin-backed credit card over there with every purchase, so earn up to 4%. And of course, get early access. Just use that link down below to get started. Let's go over to a couple of tweets, and I've got a lot of clips for you guys today. Just want to go right to this tweet right here. And this, of course, is Cathie Wood leading the 2025 Q1 and Q2 investor performance ranking, holding the #1 spot, both in Q1 and Q2. But if you compare this over here to the super investor performance for 25, you've got Tom Lee holding #4 and Cathie holding #5. So I think it's a good, comparison between the two. They have different strategies and different ways of doing things, and they also have different camps in where they invest in. I want to go to this first clip because this will get into setting this up around Bitcoin and Ethereum. Take a look.
You think that the Ethereum market cap is going to flip with Bitcoin, flippening, as they might say. We have in 2030 a forecast. We expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin. I'd love to hear your thoughts on why ETH will surpass Bitcoin.
Okay. Gold is 5% of all available assets. Dollar dominance is going to be the opportunity of Ethereum. In that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold.
Tom there, of course, defending obviously BitMine, which is BMNR. That's the ticker for what he's behind. And this is one of the biggest digital asset treasury companies out there. Well, the #1 in terms of ETH. So he's got a little bit of a stock in this play for sure. But if you look at this based on the price of ETH, with a market cap of Bitcoin, this is where it would be, around 18K. And then this is not too far away. It's a 4X, 5X almost. Tom has talked about this before, anywhere between a 15 to a 20K ETH. He is that far into understanding where he thinks the future could go. Now, this would mean that Bitcoin would have to somewhat stay still, but there would be a certain amount of rotation of assets. And his reference there between gold and what we're dealing with the S&P is an interesting one for sure. Let me go to this second clip here. This is Tom Lee explaining why he thinks that BitMine is going to be the one to bet on. And Cathie kind of comes back with a very intriguing statement here. It's almost like she doesn't really know what he's talking about and that they weren't really prepared for it. Take a look at what they had to say.
Since, BitMine is, I think, the 470th largest company in America, because we'll announce our staking solution very soon, but assuming a 2.79% yield on a pre-tax net income basis, it's like the 800th most profitable company in America. BitMine and MicroStrategy will soon be Russell 1000 constituents. So that opens up to passive index flows. 1,700 large cap managers now have to make a decision on whether to overweight or underweight the 480th largest company in America. BitMine, I think, could actually have accelerating flows next year.
The idea that indexation is going to be a phenomenon here is mind-blowing to me.
The passive index flow is why MicroStrategy has held onto it's a portion of its NAV premium.
We don't pay attention to indexes, so I've never thought about this.
All right, so when you look at this right here, there's Ark Investment. This was their original investment in MicroStrategy. That was their approximate percentage of total shares that outstanding at the time. But she was holding MicroStrategy without understanding the indexation of what Tom was just explaining. So a very, very interesting position, I think, for Cathie Wood, especially as one of the best investors out there. Now, I want to go to this next clip because this is where Tom goes into the whole idea around proof of work versus proof of stake. You'll want to watch this. Take a look.
There will come a time where we're in some kind of crisis, that the benefits of proof of work relative to proof of stake. A crisis will be a moment of self-reflection and all right, is there a real difference between this proof of work world and this proof of stake world?
It's, I think, going to happen with proof of work. because we know Bitcoin mining, for instance, is becoming concentrated in corporate. I think this year there was one mining operation that had won 6 successive block rewards, which is a high level of concentration. The block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration.
All right, so I guess that was a little bit of a slam dunk there on Cathie in reference around mining and proof of work versus proof of stake. And then, of course, it's out there. Listen, this is what's happening out there in X land often, and maybe she just didn't understand it. And this is a good example of that, this tweet right here. Bitcoin is much faster than your favorite altcoin. And of course, you can kind of see that's the Lightning Network right there. But unfortunately, this, of course, was community noted, and it says Bitcoin's base layer is only capable of roughly 7 transactions per second on TPS. Just as a reminder, guys, this is the kind of thing that I think gets lost a lot in terms of how this actually performs as a blockchain. As a speculative asset, great one, but very interesting point that Tom was making. And remember, Steak&Shake, they just deployed Bitcoin. I still think that was a great marketing ploy for them, but here is what they had to say about this. This is Steak&Shake. Take a look.
Steak&Shake has brought Bitcoin into the present. About 1 out of every 500 Bitcoin transactions globally happened at Steak&Shake. If you're an engineer, we'd love to chat with you. It's only like 3 engineers. 4, okay, there's like a dozen, there's more than 3. Okay, that's good.
I don't know. Sometimes you can't make this stuff up, so I won't. I'll just play it. Here, of course, is another point you have to look at. New data confirms Ethereum is the #1 ecosystem for new developers. This is in 2025. You can kind of see it, 16,000. Holding their own, Solana coming in, Bitcoin holding in at 7,500, Polygon growing, even Sui, and even Stacks up there as well. So pretty consistent, but the point being, ETH is the top dog in terms of ecosystems and developers, and this is only going to accelerate from here. So it is really just waiting in the wings to become this next disruption level. This next clip gets into where Cathie is saying, well, what if it does get disrupted by banks? Take a look.
What could disturb that? Knock BitMine off the perch. Solana making a go. It does happen from time to time,
If you were to look at where the development is today, especially L2s and announced, even including like Swift building on Linea, Ethereum has already won the discount to the future.
And what do you think of Ark, the layer 1 that Circle has put in place for financial institutions?
If some bank created a layer 1 blockchain and they're the oracle, we know that they're tilting that in their favor. And the security model becomes a question. And we know there's so many high profile hacks that have taken place because, as you know, that is one of the prominent features of Ethereum, that its entire history, resilience was an existing feature and has never had any downtime. Think about tokenized world and using prediction markets. A lot of that thinking is taking place around building on layer 1s and layer 2s on Ethereum.
So that is a big factor. Now, she goes on in the interview to kind of challenge the idea of L2s that could just be stealing a little bit of the activity and the fame of Ethereum. Look what he had to say here.
It's the layer 2s that are collecting all the fees. The network activity is falling, giving way to the layer 2s. But what about that issue?
In a quote world where the L2s pay 0 gas fees, to the L1, which is not true.
Mm-hmm.
The fact that Ethereum is the monetary base would actually accrue value to it. Imagine someone said, NVIDIA trades in America, it doesn't help the dollar. In fact, it helps the euro. We'd be like,
what?
Yeah. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well.
Yeah, so then you're getting into, I think, a whole new model, and that I think is the value that what Tom is trying to represent around ETH. Now, I want to revisit what he was talking about earlier in that clip around tokenization and market efficiencies via these prediction markets, because this gets into a new angle in how the markets might work. This is a very good clip. Take a look.
The real value and the unlock of a tokenized NVIDIA is that we can do a factor bet. We can then see what's priced in for their Blackwell chip sales or their China sales, because now you take NVIDIA's price and you've broken it into tokenized components. And then you can use a prediction market to hedge yourself. So NVIDIA now knows what's priced in for its Blackwell chip sales, and they can therefore work with a lot less, hey, what's priced in our stock? They know exactly what's priced in. Polymarket got 50 out of 50 states right. So they proved themselves.
Oh, yeah.
That's probably a better way to model earnings than to wait every 90 days for a company and have the CFO tied up for a month auditing financials.
You know, this is music to our ears.
Will actually allow the equity market to be more future looking than it currently is.
Yes, no question about it.
It's interesting she says, no question about it. She's all in on this, but does she realize Polymarket is engaged in this through Polygon? Polygon is an L2 for Ethereum. And this is the whole point. It changes the whole dynamic around how markets are going to work. That's why I think Polygon and Polymarket, in comparison, even if you look at Kalshi and what they're trying to do over there, these are the future of where these markets are going. So it's interesting that Cathie is not picking this up. Now, this is another clip that I want to play, and this is Sandeep, who's CEO, I guess, founder, originator of Polygon. He was on NASDAQ, and he talks about these upgrades and why they're so important, especially the Polymarket. Take a look.
We are super proud that Polymarket has come here. It's a big thing for the entire crypto space. Specifically, Polymarket is fully built on Polygon. It's built on Polygon blockchain. We have now gone to the capacity to have 5,000 TPS, which helps applications like Polymarket to scale their user base to hundreds of thousands or millions of users, right? So now the gas fees becomes even cheaper. So this upgrade is extremely pivotal for us to go to 100,000 TPS, which allows us to go to Visa or MasterCard level throughput, so that like multiple parties across the globe can use this platform for payments and stablecoin and tokenization. Whether you are on X or you are on Telegram, if they are using Stripe in the background, the subscription, the monthly subscription that you do, that now you can do with stable coins on Stripe, and all of that gets processed on Polygon.
All right, and just remember, Stripe did do a big announcement this week in reference to subscriptions being able to pay with crypto and stable coins, and that's kind of where Sandeep is going. But really, when you look at this, the opportunity is pretty large. And what Tom Lee is trying to represent is what he's doing, obviously, with the treasury company, but also in general with Ethereum, is really taking a look at the total TAM. And this is an important factor when you really kind of consider where the future is going. Take a look what he had to say about total market size.
I don't think one blockchain can hold the entire financial system anyways. Let's say your 27 trillion is correct, and I believe it is even conservative. Today, global GDP is 80 trillion. Plus, we know that as you tokenize loyalty and IP, things that are GDP measurements but not financial markets, also on the blockchain. So maybe the total, what's ends up on the blockchain is 60 plus 20, 80 trillion market versus your 27 trillion. 27 trillion seems very reasonable. I mean, maybe low. That cannot fit on one ledger.
So from that, you can kind of get what Tom Lee is talking about. Cathie Wood looking at anywhere between a 25, 27 trillion in terms of addressable market, but what he's looking at is a much broader base. And I think even though we may see multi-chain world, and I think we will, the fact that this could be considerably higher, possibly magnitude level, is pretty significant around the future of Ethereum. So all of that being said, there's one more thing that happens when all of this starts to come together, and that is going to be staking. Here's a clip that talks about that.
And we were having trouble gaining access to ETH for our ETFs. SEC does not yet allow staking. And we tried to gain access through other Canadian ETFs, which do allow staking. But then we were becoming way too big a percentage of those. And we were also subjecting the funds to the risks of bad income. You came along at the time we were trying to figure this out and provided a solution. You really did solve a problem.
Yeah. Well, thank you for also investing in BitMine.
I like that, investing in BitMine, because this is exactly the case. And we're going to see staking. It's going to happen. Most likely we'll start to see this across a lot of different financial institutions. And of course, ETH will be a big winner of this. Here was Ark kind of breaking this news. This is a Canadian ETF that just staked 130 million ETFs. This is kind of what she's referencing there. And they hold 620 million of ETH right now. And this is in just one ETF in Canada. So imagine what this is going to look like here in the US. Imagine what this is going to look like as we see traditional finance start to move into the staking world. Guys, this will be huge. So we're going to do more breakdowns like this for you. If you like them and you want to jump into our own club, you can do that in the Diamond Circle. Just click the link down below. It's absolutely free. Check it out. Of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.